What up, investors? What up, traders? Ken here from Dyslexic Investor, and we're going to be looking at today a article that I found via investing forward slash or R in Reddit, and this article basically breaks down some startling numbers that the feds are saying. Again, I know I keep on talking about this. That this coronavirus, COVID-19, is really a huge damper and a huge issue for the economy. Not just now, in a couple months from now. So this is what the Fed's saying. They're saying a total of 47 million unemployment rate may hit 32%. Okay? 32% is basically the highest that we've seen literally since the Great Depression. In the Great Depression, we had excess of unemployment of like 20, 25 on a lot of days, a lot of times, a lot of years. This is but the thing is like, this is the government telling people not to work, not to go out, closing down bars, closing down restaurants, closing down all necessities that isn't a essential business, which somehow liquor stores are in some places. Anyways, that's enough said. Just projecting a super high unemployment in the next coming months. Again, you can see here on Macy's furloughing basically every remaining employee they have left. And this picture right here just does it justice in the sense of no one's out there shopping. Because again, the government told them to close. And the thing is, just to give you a little bit of perspective, yeah, here it is. The 30% unemployment rate would be the top of the Great Depression peak at 24.9%. So 24%. So 3 out of 10 Americans don't have a job. That's that's a lot of people, folks. That's a lot of people. And I read this article and I didn't see anything regarding the $1,200, the expansion of unemployment cost. So what they're trying to do is they know that people are going to be unemployed due to the fact of they're telling them they can't work, but then they're going to give them some little bit of incentive of the $1,200 check to most folks. And then for a kid, you get like $500. And then if you're already unemployed, that they double the benefits for the really long extended period of time on top of the check that people are getting. And they're just, I don't like to use the word hoping, but I guess they're doing air quotes, projecting that this would hold it over until they can get to the other side of this overall crisis, of this pandemic of the coronavirus fight that we're trying to get through. Whew. So this is the crazy part. Like, just the amount of layoffs is just like when I read this is like a super short video, and it's basically makes you saying like, yeah, we got the most essential staff. I'm like, what is that? One cashier and one floor runner? Like, what is that? Like, I haven't seen many people at Macy's in the first place, but that Godspeed to them. The thing is this is not the formal Fed chief. This is the president of the St. Louis Fed Department projecting this and saying that these are some internal numbers that are looking grim and hopefully should be short-lived. Meaning that the next coming month or two, so we might see 32% this coming week, then we might see 27% the next month, and then hopefully it cuts back down to like, basically we had crazy unemployment. Let's go look up unemployment rate. Boom. So basically, unemployment rate in U.S. history. That's what we want to see. All right, so unemployment rate from this 1960 to 2019. So we had the lowest basically in April of 2019 at 3.6%, at 3.5% of 1969. And you see, this is kind of crazy. And you see, since that, you had a huge spike of unemployment. Not a huge spike, but they're saying 30%. So this graph, these little lines would look like tiny bumps, not ginormous mountains if we hit 30%. Again, no one can measure this. It's because this is just such a crazy amount of people we're talking about here. We're used to talking like 263,000 or 300,000 or 357,000 at the most. Now we're talking in the millions. We're talking tenfold of just jumping on the sense of how many people are going to be losing their jobs. Like, that's just the crazy fact of it. Being furloughed or not, that means, yes, you still got your job, but you're not getting paid. Like, just sit at home and watch Netflix, my friend. Here's some money. Just we'll get through it. I like to be very optimistic and very positive about things, but I don't know. Like, that just seems a little. We need a little bit more of a cushion if we really want to do something more. So that being said, we're going to be looking at the S&P 500. So the big numbers coming out this Friday, which is going to be the 3rd of April, which is the non-farm payroll number. It comes out at 8:30 Eastern Standard Time, and that gives you the number of what is the unemployment number. And if you recall, back in what was that? 2018. Nope, that's the wrong one. We're going in 1918, right here. We had that little. It doesn't do justice here. So this guy right here, we're just gonna highlight that. Draw a little oval around it. This right here, we had that crazy tax credit that President Trump put out, but then we had a lot of spookies when the overall unemployment number was going to be fairly high, and it did show a slow in the economy, and everyone flipped their lid, and it literally jumped basically from the tippy top. Let's just draw a quick line down to here. It dropped like nearly 12%. That's a significant amount, and basically three. It was a little bit over a 2 week time frame that it just dropped out of the sky. And that was just for the unemployment. Like, we're already down 30 some odd percent. That being said, we could be hovering back up to the 266 level, 265 level, and then I could see a potential, maybe not the test of the bottom, but we could see a little more selling off because a lot of people kind of bought the dip over here, maybe bought too soon, and are looking to get out at the break-even point. You do see on the weekly chart here that the moving averages are starting to curl. Again, this is the 5. Like, this is going to be the one that's going to start curling the first, but these other ones need to start curling. You see the 21, which is the very important one that I like to watch. It's starting to slow down. It's not a very heavy, steep slope. Things are starting to curl. This one is kind of stopping at the 200 here on the moving average on the 200 on the weekly chart. And then we pump this out to one of my favorite charts. You can see here that the RSI has bounced, which is a good sign. The Chaikin money flow, which means that not many people are buying yet, meaning that they are projecting another potential bottom. I kind of want to see this lower. Like, I think we need to flush more people out. Again, I'm trying to be very optimistic here and just warn people of, like, this might not be a perfect V-shaped bottom. Like, a lot of people just think we're going to bounce and go flying higher. We're throwing a lot of money at this, and I still don't honestly believe that people are fully understanding the extent of this on the economy and how this could affect us not just next week, but the next 2 or 3 months. Like, things are going to be changing in the marketplace. It's not going to be like Macy's going to hire every single one back. They're like, actually, we only needed 2 people in this department, and we have 5, so we're just going to cut expenses more. Like, when you start pushing and start changing the mechanics of things, people are going to see different ways on doors opening, what really is needed, what's not. And I think a lot of businesses are going to be seeing a little switcheroo in their business models, and that could be changing for the better or the worse, for depending on what side you're on the sense of this has changed the mindset for a lot of individuals, and this is going to be stuck in a lot of people's heads for a long time. To even 10 plus years, people are going to be thinking about this moment of, like, I need to get my N95 mask for Christmas. The amount of gifts and Christmas gifts about those is going to be yeah, people are gonna give them like it's gonna be crazy. Let's go to a monthly chart though, and you can kind of see here we have not. So this is my only really strong kind of the bull case of the thing is that the RSI RSI has not touched the bottom here yet. On the very bottom here at 20. In 0809 it did. The thing is to give you some perspective. So everyone thought the market in 2008 bottomed in October. It didn't. It wasn't fairly close to where we are now. The Chaikin money flow was a lot lower. The RSI was a lot lower. The momentum was a lot lower. So I'm thinking if you look at the past since basically from the very low in 09, you see a kind of a very big trend here of having the momentum basically above the purple line, so it being positive the whole time. So this is actually just kind of went negative. This could be a sign of a potential short-term bottom, but I think there might be a potential test of a lower level in the next coming future, because I'm being very positive. We're trying to make a very bull case here. I think that we could go higher in the short term, but there might be a lot of hurdles down the road with a lot of earnings and a lot of other various aspects if we just don't know. Like, have we ever had this many unemployed and then bring them back to the workforce? No. Like, how are we going to pay for that $2 trillion stimulus bill? Like, these are the huge questions, and I think in the short term it sounds great. It was a great idea to give the American citizens that paycheck. It was great. It was great to give small businesses the able to forgive loans at a basically no interest rate, and just giving them the amount of cash flow to help withstand and not firing their employees if they're a small mom and pop shop, a sole proprietor hiring a couple folks. Very important to have that. That being said, we haven't done this in any of our lifetime. So I'm just seeing a potential little hiccup coming, maybe even a bigger one. I'm not trading it quite yet. I have a couple puts building up slightly that I bought today, but that being said, it's not going to be a substantial sell-off by tomorrow. I think in the short term, a lot of things are pointing somewhat higher, but I don't know how much higher. So around 266 is going to be where my question marks come in. I have a big question mark right here. Whoop, whoop, whoop. Can I even draw a question mark? I'm not going to even try. But yeah, big question mark here if we can stay above and break above the 200. Because multiple times, like, we have not closed below the 200 in quite some time, since basically 2011. And this is we closed 3 weeks below the 200. And that's never good. A lot of moving averages have been spaghettied and cut. It's going to take a lot of time to recover. Getting back up to these levels is going to take years, I believe. It's going to take quite some time to be able to get back up there. Guys, thank you so much for watching. I greatly appreciate the support. And don't forget to like and subscribe if you like the content. If you have any questions down below, please put them in the comments and I'll get to you. Again, guys, take it easy. Be safe. Love you long time. Peace.